traders, Gary Wagner here just before 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, 23rd day of July, 2015, and this is the daily report for gold and silver. After firming up a little bit in overseas trading last night, we do have the precious metals returning under pressure and trading lower on the day. We're looking at spot gold right now. It is currently trading roughly at 1088. 1087 puts it off about $6 on the day. Now 87.81, in other words, what we're looking at currently is the low of the day, high 1105.87. Silver also trading lower on the day now. It's actually off about 16% or 1.12% lower when you compare that to the drawdown in gold, which is off about 0.5%, a little bit over 0.5% on the day. It seems as though that gold-silver ratio, as they move in tandem, is back in play, where silver outproduces on the upside in terms of percentage gains and outproduces on the downside in terms of percentage drawdowns. We absolutely have some pressure coming in silver. Low 1454.50, so it's just a couple of cents off the lows, and the highs roughly 15, actually 1496, and that is where we're putting resistance in the market. We'll touch on silver in a little bit. So traders, I want to start today's show by looking at a daily chart. Having a little difficulty in terms of my daily charts updating, so a quick fix is simply to set it to 1440. So if that's throwing you off, the 1440 simply represents a day in time. You can see the couple of dramatic sell-off days, especially this day here. We saw this market, as I said, start above 1130 and trade as low as 1080, which was our basic target in terms of where we thought the market could go to. The following days, the only green day we received of that, of course, was early in the week. But since then, we've had these dramatic declines over the last couple of days. Now, we did have the market trading firmer in overseas trading last night. As I said, I think it hit a high of around 1105, 1106. And you can see that by the nature of this long tail that we have on our daily chart. Now, it's not about the dollar, because typically we've had this dollar strength, and when gold was trying to move higher, it was kind of like a salmon swimming upstream. Well, here we've got the salmon selling downstream because you have dollar weakness in the market, and that's actually adding value, about $3.50 of value to the price of gold. However, just selling gold right now is taking it off about $8, $7.80 on the day, and that's where we're getting our net negative $5 change on the day. So we've got a weaker dollar, but we have weaker gold also. When you look at this single candle type, you get a candle that's very, very much like an umbrella group of candles in which you have a series of really 4 different variations. Now, of the 4 different variations, they are all part and parcel of the umbrella group of candles. It is the only candle type in which color is not important. In other words, you can have a red-bodied candle or a green-bodied candle. But the key to this candle, regardless of whether it's red or green, is that it's a small-bodied candle, meaning the open and close, in terms of the relationship between the two, are very, very close together. Now, if a market has been moving down, as in this case, this type of candle is identified here as a inverted hammer. If it's found at the top of the market, and I'll try to find an example right like this, then it's called a shooting star. In other words, after a incline, after the market's moved to higher pricing, you find this candle type here, it's a shooting star. If you find it down here, it's an inverted hammer. The same with this. This is a hammer after a sell-off, and a hanging man if you have the market coming down. So interesting candle type, but you can't really make that much of it in terms of its relationship to the other candles. What's important to me when I look at this market is this low here and whether or not this low can be taken out. Because as we have pointed out, if this low in fact is taken out, the next real area where we can find technical support doesn't come into the market till about 1065. Now, to illustrate that point, what I've done is pulled up a weekly chart, and as I said, we're having a little difficulty in terms of updating. The market is truly trading at around 88 right now. But in terms of the support level that I mentioned, that point at around 1065, if you go back, this is 2010 here, and this particular mark here, this low, is the beginning of February. And the reason I remember it so well is because the market had been really a runaway freight train. This was really the beginnings of the major bull run that we had been experiencing. Gold had just made it over 1,000, and from there was really barreling up, and in fact hit a high of just above 1,200. You can see that here. Now from 1,200 it came and broke back down, and that's why a lot of people remember it, because this is one of those lows that we saw before this tremendous upside surge that we experienced throughout 2010 and into 2011. Also, this is where George Soros was accumulating a lot of gold, right in this area, and that's why I remember that date. But this particular price point is really the next target that we have should this market continue under pressure on a technical basis. So our current trade, we're sitting short between 91 and 90. Market's trading around 88. I really believe that if we do not find this market, find support, we'd have to see an effective close over 1100 again. We're probably headed to 1065. That is my first initial target. So traders, what about silver? As you know, we issued a sell recommendation in gold, but I purposely kind of left silver to the sidelines. For those that are trading silver for speculative purposes, I do suggest moving to gold, because I think that there is more opportunity there, because we've seen this division between the way gold and silver move, although that's not the case today. We do have the market under pressure, but currently trading roughly at 1461, 1471. The easiest way, of course, is just to look at a half a day chart. That would do it for us. So we're at 1461. And really, we've got some support at 1450. If the market cannot hold 1450, it could go into the low 14s, maybe 1410 to 1420. But for some reason, I believe that we could find support here. Specifically, if the equities markets are running strong because there's that heavy industrial component use for silver, it should make a distinction and keep it under less pressure than gold, which of course is acting on that safe haven status. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.